everyone, welcome to my YouTube channel. In this particular video, we'll solve one more problem related to incidence of tax. Income from investment in Kolar. Kolar is a place in India. So the arising aspect is in India and receiving aspect is in India. When both the aspects are in India, it is considered to be Indian income. So as it is an Indian income, all the three people will be taxed because it is an Indian income. Next. Profits from business in Uganda controlled from Chennai. So you are controlling a business from India. It is a controlled income, and the controlled income only two people will be taxed. That is ordinary resident and not an ordinary resident. So because it is a controlled income. Next. Income from property in UK received there. So income is arising in UK and you're receiving in UK. So both the aspects are outside India. When both the aspects are outside India, we consider it as foreign income. This is a foreign income from other sources. So when foreign income from other sources, only one person will be taxed, that is ordinary resident. So only for ordinary resident column, we will write the amount. Next. Income from poultry in Bangalore. As I've discussed in the first chapter videos, poultry is not an agricultural income. So it is a taxable only. So poultry is not an agricultural income. Don't get confused. So you are receiving an income from poultry. So this arising aspect is in India and receiving aspect is also in India. In Delhi is in India. So when both the aspects are in India, we consider it as Indian income. And in Indian income, all the three people will be taxed. Next. Salary received in England for services in Sri Lanka. So both arising and receiving aspect is outside India. When both the aspects are outside India, we consider it as foreign income. This is a foreign income from other sources. So only ordinary resident will be taxed. Only ordinary resident will be taxed. Next. Interest on private company securities. So which is in India only. So both receiving and arising aspect is in India. So when both the aspects are India, we consider it as Indian income. So all the three residential statuses will be taxed. Next. Profit from business in India controlled from Africa. One half received in India. So this is a confuser. ಇದು ಕನ್ಫ್ಯೂಸ್ ಮಾಡೋದಕ್ಕೆ ಕೊಟ್ಟಿರೋದು ಬ್ರಾಕೆಟ್ ಅಲ್ಲಿ ಇಗ್ನೋರ್ ದಟ್. Profits from business in India, main arising aspect. Arising aspect is in India. When it is in India, don't see the receiving aspect. Straight away, you can blindly write that it is an Indian income because the income is arising in India. So all the three people will be taxed. Next. Salary received in India for the services rendered in Singapore. So arising aspect is in Singapore. Receiving aspect is in India. Either of the one aspect, if it is in India, it is considered as Indian income. So 25,000 is an Indian income and all the three people will be taxed for that. Next. Past untaxed foreign income brought into India. So it is an exempted. Past untaxed income, any past untaxed income, if it is there, it is completely exempted. We don't consider it over here. Next. Dividend from Indian company. So both the arising aspect and receiving aspect is in India. When both the aspects are in India, we consider it as Indian income. So all the three people will be taxed. Next. Interest on bank deposits. So both arising as well as receiving aspect is in India. When both the aspects are in India, it is considered as Indian income. So all the three people will be again taxed. So the taxability will be for all the three residential statuses. Next. Income from agriculture in Haryana. Haryana is in India. So in India for agricultural income, there is a complete exemption. So this agricultural income will be completely exempted. So it is exempted. Next. Income from agriculture in Bangladesh. So income is arising outside India. Receiving aspect is also outside India. When both the aspects is outside India, so we will consider it as foreign income. This is a foreign income from other source. So only one person will be taxed, that is ordinary resident. Only ordinary resident will be taxed. Next. Gift in cash from father, rupees 30,000. So father is a blood relative. So whatever the gift you receive from him, it is completely exempted. It is completely exempted. It is an exempted income. Next. Interest received in Japan, later on remitted to India. So the word remitted should be ignored in incidence of tax. So concentrate only on the first part. Interest received in Japan. So arising aspect is in Japan and receiving aspect is also in Japan. So both the aspects are outside India. When both the aspect is outside India, we consider it as foreign income. So this is a foreign income from other sources. Only one person will be taxed, that is ordinary resident. So only for ordinary resident, the taxability is applicable. Next, share of income from Hindu undivided family firm. So as I told you that any income from Hindu undivided family firm, it is completely exempted. So it is a exempted income. Now add all the column, you will get the total. Ordinary resident, it is 5,37,000. Not an ordinary resident, it is 4,27,000. And non-resident, it is 3,77,000. So this is all about the problems on income tax, incidence of tax chapter. So you try to solve the problem once by yourself. If you're able to solve, well and good. While solving, if you get any doubts or queries, please post all your doubts and queries in the comment box so that I'll respond to your doubts and queries as soon as possible. Thank you for watching the video. I'll come back with some more concepts of income tax in my next videos. Thank you for watching.